Let's welcome on board our chartists and figure out, while yesterday, of course, the market recouped all of its losses, but is there some more damage to go, or is the capital gains tax changes, are they all well in the price? Vaishali Kunal Bothra in the studios right now. Vaishali, hi, morning. What is your sense? We managed to do pretty okay in the, even though it was pretty unseen or unforeseen that there are going to be capital gains tax changes and pretty much across the board, both for F&O, STT, as well as LTCG. Do you think we'll manage to hold on to 24,450 thereabouts?
Very good morning, all of you. Yes, so yesterday we were expecting a bit of volatility and we witnessed that Nifty was dragging towards 24,200. That was our near-term support levels. It did breach for a while, but we have again come back on 24,400, above 400 levels. So I think gradually it's sinking in, and all these taxation issues and all, they are all very short-lived because we don't lose hope. We never lose the trading once you are used to it. So, well, that's part of the game. And I think as long as we hold on to 24,200 as crucial support levels, and once we see a decisive move about 24,600, we are back on track. So maybe for some time we may see Nifty and Bank Nifty oscillating. But yesterday we saw it was not a bloodbath. It was just a stock-specific movement that we were witnessing, and we saw good strength in FMCG, two-wheelers, auto stocks. So I guess it will be a sideways move.
All right, Kunal, morning. Let's get in your take. And what do you believe explains the kind of bounce back that we witnessed in the market? And what does this spell out in terms of levels for the markets now that the big event is out of the way?
Good morning. So, the data is quite interesting because, yesterday when we looked at the indices, in the first half, there was a very sharp correction through the mid-session yesterday where the index was down 400 points, the Bank Nifty was down some 750, 800 points. And then at the close, we saw both the indices recovering. Now, in that extent, and because it's the expiry week, so I think that context also, the rollovers and the data matters quite significantly. So, what we saw yesterday was two different trends. One is that on the Nifty we saw unwinding of long positions by I think a margin of around 25 to 24,000 odd contracts, differentiating between the current series, the July as well as the month of August. And the interesting bit is that the Bank Nifty saw for the first time I think the last many days fresh build up of short positions, and there was almost an addition of 35 to 40,000 contracts for the Bank Nifty relatively. So I think in that context we are now probably going to a phase, or we may enter into a phase where the Bank Nifty may start to underperform and get into a drag from here on, looking at the way many of the banking stocks have behaved over the last 1 or 2 weeks, as well as the correction for the Bank Nifty relatively swift and sharp yesterday. I would believe that we could be at a tone where the Bank Nifty would probably underperform, and many of the other sectors like IT, etc., they could probably take a lead and try and get that balancing effect on the indices. No major trend on the Nifty, but Bank Nifty I think broadly could underperform.
If you like this video, then like, share and subscribe to ET Now.